One time for the underdog. One time for the underdog. You got the world on you.
Hey traders, welcome back to the FX220 YouTube channel. It's been a long time I haven't made a video about the analysis behind my trades. So if you are new to this channel, this is me, your man Usama, the world's best looking trader and the most accurate one. Just kidding guys. So in this trade on the EURUSD, I will explain exactly how and why I did take this trade and the analysis behind it. So as you can see, it went straight to the pip and smashed my take profit and went for more. So as always, I start from the higher time frames and do my top down analysis from the monthly, the weekly, the daily and the 4-hour time frame. I draw all my key levels, my trend lines, and I try to decipher the trend using many techniques and many tools. I like one of them is reading the price action and seeing how the market is creating these lower lows, lower highs, lower lows, lower highs. So we kind of know this is a strong downtrend. The euro has been trending down since a few weeks now. So, and it was a very strong trend. We had many trading opportunities around our EMAs. So, and I've done my market maker analysis. I've tried to count the waves, so I kind of know that this market is on a downtrend and we have a bearish market cycle. So look at how many trading opportunities we got the past few weeks. So in today's trade, I know that this market is falling and it's a downtrend. We had a break of our weekly level and we had a retest. So we have a breakout retest, then a continuation, which is perfect pattern. Price went and communed back with our EMA 50, gave us a nice M formation and very strong bearish candle as a confirmation candle. I got a lot of messages from people that went long on EURUSD. Actually, I don't know why, but maybe they just saw price bounce off this weekly, and they thought that price would suddenly just shoot up. And even if that was to happen, we wait for confirmations, okay? We wait for price to confirm for us the direction, go up. We wait for EMAs to cross back over to the upside. We wait for many things, okay? We only trade that which is certain for us. We wait for the market to confirm for us the direction and we ride along with it. We're not trying to predict very strong move and long-term moves, okay? We're only gonna try to predict the immediate trend, okay? So in this case, I know that everybody knows that the market is on a big downtrend. Why would you go against the trend? Okay, so this is a basic mistake that I used to do in my beginnings, when you try and like to predict the absolute top and the absolute bottom and the turning point of the trend, but it doesn't work. You will get a lot of losses and you will regret doing it. So the best way to trade is to trade with the trend, okay? With the intermediate trend, with what the market is showing you. This market is showing us clues that it's falling, so we're not gonna take any trades going long. We only look for shorts. Same as what happened here. I came here around the open of London session. I saw this M formation on the 50 EMA, and we have a breakout, retest, continuation pattern. Okay, we broke this weekly support and we came back to retest it. This is the Asian consolidation, and then boom, start of London session, market just fell down and I was in. So this setup meets all our criteria. We didn't speculate on anything. I mean, it just bothers me when I see like most traders that, and also the mentors that teach traders to trade blindly price action without any real confluences behind their trades. I mean, they would just see a candle bouncing off, let's take this one for example. They will see this candle bouncing off a weekly resistance, and they will think just because this candle looks like an inverted hammer, which is a reversal candlestick pattern, they would think that the market would suddenly just shoot up in that direction, okay, without doing any analysis about the overall trend and the long-term trend and the intermediate trend, the weekly market cycle. They don't take this seriously. That's why they have many losses. This is why you get 95% of traders lose money, because they simply trade price action. Even if you come see this example, we had like W formation on our weekly, and most people just trade it going to the upside, but they will hold for long. They will think just because we bounced off this level, we're going up forever. It doesn't work that way, okay? This is how most price action traders trade, and this is how most trading mentors teach their traders. They see a pattern, they see a candlestick formation, they just take the setup, which is clearly a losing setup, okay? So we don't do that. We do not speculate, okay? Other people, they speculate on their trades. This is why they lose a lot of money. For us professional traders, we do not speculate. We trade only that which is certain for us, which is familiar for us. We know why every single move happened in the market, okay? And here clearly we know that the trend is to the downside, and this is like a market maker setup. when they come and create our information on the 50 EMA. We have like wicks to the top, we have like breakout and then retest of our weekly resistance. As you can see it here, we have many clues and many confluences. The more confluences you have, the better your trade is going to be. The 50 and 200 EMA are used by big institutions and banks. This is why you see market respects them. If you try and go to your charts and see they respect them, price do bounce off these EMAs. Like, let's try other EMAs. I have here the 8 and the 21. The 8 EMA and the 21, and look, I mean, they cross every second. You do not have any valid trading signal or pattern. You cannot read anything in this chart, okay? Look at this. This is just chaos. They are mostly going sideways, the EMAs. So you won't have any trading signals. But notice the difference when we use the 50 and the 200 EMAs. Things suddenly just become more clearer, okay? We have price respecting them, we have price bouncing off these EMAs. We can see the patterns created around these EMAs. Notice how you can clearly read the patterns. This is an M formation. Look at this beautiful head and shoulders. Look at, you can clearly read these patterns and these formations. This is another M formation. I didn't take it simply because I wasn't awake around that time. This is the Asian session, so that was very early for me. It was at 5:30 a.m. so the ideal entry was around here, and when I miss my ideal entry, I just don't bother taking the setup because there's no point of taking a late entry. And this is exactly what happened here today. We had this M formation with a beautiful and strong confirmation candle. We had our ideal entry. We were not late or anything. We make sure that we're not trading against big or a major key level or trend line. The next key level is a daily level, which is 30 pips away from our entry. So we are safe as long as we have more than 25 pips. We are safe. We can take that trade. But let's say there is a major key level around here, okay, and our entry is right here. We will not take this trade simply because we know that market will just trend from our entry, hit this level and then reverse, okay? So we will avoid taking this. We make sure we're not against any key levels or trend lines, and we make sure that we are aware of all the major news releases that could affect our trend, okay? I've checked my economic calendar and I've seen nothing significant around that time, so that trade was safe. And we also had strong confirmations from other pairs. Let's check USD CHF around this time. It was creating a W formation and it was looking strong. Look at USD CHF, it's been trending up since a very long time. But today it went sideways simply because there was CHF strength. So when you have a strong currency against a strong currency, this is what happens. You have a ranging market, okay? This is why we always choose to trade a strong currency against a weak currency. So in this case, we know that the USD have some strength and the euro is weak, so we're gonna trade the euro. We're not gonna trade on USD CHF because CHF also is strong around that time, so we avoid that. Let's check pound USD. We have a confirmation that the USD is showing strength around that time, around the time when I took my entry on EURUSD. So we have another confirmation. Let's check out AUDUSD as well, who's falling very big. So this is another confirmation. Same with NZUSD, it was falling. So this is the key to having a high win rate, like from 90 to 100% win rate. Confirmations from other pairs are key for this, and trust me on that. I've taken thousands of of trades since I've started my journey as a trader, and in my beginnings I used to lose a lot of trades, okay, simply because of this. When I developed this rule that I have to look into correlation before taking any trade, like my win rate just skyrocketed. So these things work from experience. When you have a move that's happening across many pairs, that's a valid move, and alongside with your pattern, with your market cycle analysis and the trend analysis, with your ideal entry, and you're aware of all the economic releases that could affect your trade, then your trade meets all criteria, okay? This is another confirmation from the USD Turkish Lira that we have USD strength. This pair is currently on all-time highs, okay? It's creating all-time highs, and it reached my target that I had for it. I had this ABCD pattern on the daily time frame on the USD Turkish Lira, so this was my first target, D1, at our fib extensions, the minus 0.27. We reached that price to the pip. A to B, B to C, hit our 50% fib level, and then from C to D1, and then we may go to D2. So that was a perfect ABCD pattern. It's a high probability pattern that can be used to determine future targets. So this is a bonus tip of this video. We were talking about the EURUSD trade, okay? Notice how here market went for a lot after my take profit. Market went for 72 pips, like with no significant drawdown or pullback. If you were trading this move with 10 lots, that's $7,000. If you are trading with 20 lots, that's over 14K for the day. So you do the math. Pretty good for one day. For me, I just stick to my goal of pips because this is enough for me. And it's just my preference. I like to be in and out quickly. For the people that like to hold, you can trade your stops past break even or take in some profits and let the profits run and bank that money. Okay, so I hope you guys enjoyed that video. If you are new to this channel, make sure to subscribe. We're gonna be posting every single week new analysis and new trades, and I'm sure you will take something from these videos. So thank you very much, and until next time, good luck and good trading. This is FX220.